Uh, Sometimes instead of issuing cash dividends, companies will repurchase stock. Now, this is similar to what we worked with in Chapter 13, where we were doing recapitalizations. We were taking the proceeds of debt and then repurchasing shares. But sometimes, like I said, instead of when firms have monies they want to get into the hand of shareholders, instead of issuing a dividend, they'll just buy back stock. Now, there's a couple of different ways that firms can go about doing this. One, they can just go into the market, yeah, essentially call up their broker or go on their trading platform to buy their own stock. The second way they can do it is what is called a tender offer. A tender offer. And a tender offer essentially companies publicly announces that it would like to repurchase a certain number of shares of stock at a specified price. So they indicate the price they're willing to pay and the number of shares they're willing to buy. Now, the third approach is where they talk to individual shareholders that now typically is going to be shareholders who have significant positions in the stock. They talk to individual shareholders and they repurchase their stock. Now, oftentimes this happens when a company has been quote unquote green mailed. Now, what does that mean? Oftentimes, investors who are looking to make a quick buck will find a company that they think could be operating a little bit more efficiently, and particularly a company that has a lot of cash on its balance sheet that they're not really using immediately to invest in some new venture. So a shareholder will come and buy a stake in a company and then basically say, well, listen, I want to talk to the board or may even demand a seat on the board. And then that person comes and says, look, so you guys aren't doing this, you aren't doing that. You could be doing better by the shareholders if you did this, that, and the other. And in essence, uh, the firm can do one or two things. They could take the suggestions under advisement, or if they're annoyed by this person and they have the money, they could say, you know what? Thank you so much for your suggestions. How much would it cost us to make you go away? And then they, end up repurchasing that stock. Now, often they end up repurchasing that stock at substantially higher prices than what the stock currently trades for, which is why people refer to this as green mail, as opposed to black mail. All right. Now let's compare repurchases versus cash dividends. Repurchases return cash from the firm to shareholders, but the difference is isn't the same tax implications. They're in the same tax implications as if you pay a cash dividend. In the same tax implications. All right. Now, recently, and really since the 2000s, a lot of firms have engaged in stock buybacks. Now, repurchases, buybacks mean the same thing. And one of the reasons why firms like to do this is a quick and easy way to bump up your stock price. And remember, the managements of most publicly traded firms are compensated primarily by stock options that they hold. So it's in their interest to get the stock price up. It's in their interest to get the stock price up. So this is a very appealing strategy to managers. Now, what is the tax effect of dividends versus stock purchases? If you declare a cash dividend, then the investors really don't have control over the timing and size. And then whatever dividend they receive is considered part of their ordinary income as an individual. On the other hand, if the firm engages in some sort of repurchase, investors, shareholders can decide if they want to participate. And they can also, because they can decide if they want to participate or not, the taxes only flow as a result of their decision. So they get taxed if they choose to sell and they realize the capital gains on the sale. They end up having tax implications if they choose to sell their stock back to the firm and their basis in the stock results in a capital gain. Now, last but not least, if the shareholder has held a stock for more than a year, then they also probably can benefit from the lower capital gains tax rate because ordinary income is generally taxed at a higher rate than capital gains. All right. I'm going to stop sharing my screen.
Happy studying.